On September 18, 2013, shares of offshore rig operator Seadrill Limited recorded their highest ever closing price of about $47.78 a share. About 9 months later, the crude oil market started trending downward, with Brent crude oil reaching a 10-year low of about $29.80 per barrel within the first few months of 2016. The oil market crash would crash Seadrill's stock as well. Seadrill stock currently trades in its lowest price range ever, around 43 cents a share. This Investopedia article looks at Seadrill's rise and fall. Given that Seadrill was founded in 2005, it had the opportunity to invest in state-of-the-art drilling ships and platforms from its inception. For instance, in its 2009 10-K filing, the company noted that about 70% of jackup fleets worldwide was over 20 years old. Former CEO of Seadrill's competitor Transocean Limited told analysts in 2010, while discussing the rising costs that the company was experiencing at the time, that 2/3 of Transocean's fleet at the time was from prior new build cycles. At that time, Seadrill's fleet was about 2 years old on the average. The fact that Seadrill's fleet was modern with the fleet built to cater for the new realities of offshore drilling gave it an edge over its competitors. Seadrill's fleet of rigs had more demand on an overall basis when compared with Transocean on the basis of percentage of rig days that committed as of December 31, 2009 for the years 2010, 2011 and 2012. The high rig demand that Seadrill enjoyed quite exemplifies how it rose to become one of the top offshore drillers around. Seadrill continued to lock down more contracts and grew its top line. Going into 2014, the year that the oil market crashed, Seadrill had 84% of rig days in the year 2014 already committed for its jackup rigs, while 97% of the rig days in that year were already committed for its floaters. That, on average, bettered Transocean's committed fleet rate for 2014. Transocean only had a 76% commitment rate for its high-specification floaters, a 67% commitment rate for its mid-water floaters, and a 90% commitment rate for its high-specification jackup rigs. There is no conspiracy theory for why and how Seadrill has fallen. However, even though Seadrill was being heralded as an offshore driller whose modern fleet gave a competitive advantage over its competitors, its stock has suffered the downturn more than its peers Transocean and Diamond Offshore Drilling Incorporated, and this has happened while its revenue dip has been less steep than Transocean's and Diamond Offshore's revenues. Since the end of 2013, Seadrill's revenue has dropped by about 46% versus Transocean's 61% dip and Diamond Offshore's 49% dip. Its stock, however, has dipped by roughly 94% versus Transocean's 87% stock dip and Diamond Offshore's 84% stock dip. As crude oil prices dipped, the demand for rigs dipped as well, hence, the drop in drillers' revenue. Management noted in Seadrill's Q1 2017 earnings call that only 21 of its fleet of 38 rigs were on contract. That means that since the company's Q4 2015 earnings call 7 additional rigs had become idle, now 17 idle rigs in total. But what has really made the future bleak for Seadrill is its debt burden. Since its inception, Seadrill has relied significantly on debt to grow its business. As of the third quarter of 2013, its total long-term debt had risen to a high of about $12.7 billion, higher than Transocean's $10 billion and Diamond Offshore's $1.5 billion total long-term debt at the time. The explanation for the huge debt was that Seadrill was using it to grow its fleet. It didn't appear so much like a bad idea considering that oil was trading at record highs and the demand for rigs was high. The oil market dip ultimately made a fool of that strategy. Seadrill, with total long-term debt of over $9.6 billion as of the end of the first quarter of 2017, currently faces a refinancing deadline set at July 31, 2017. Regardless of what deals the company reaches with its debt holders, things aren't looking bright for shareholders of Seadrill at the moment. Since shareholders are regarded as owners of parts of the company, they'd be the last to get anything from the company when the restructuring is completed. Seadrill's various debt holders, bondholders as well as suppliers will be the first to be settled. This uncertainty keeps piling pressure on Seadrill stock.